Bruges, yeah, Bruges, no.
Oh, you didn't. I thought you brought copies.
I bought the MRB group. Would you like me to make copies of them now? Your wife this time, or you just?
Very large too.
I already got it.
Posted size.
Okay, so next year we got to get in the over 50 Gus Macker tournament, right? I think it's over 40, but then they. What do you think?
I got second over 41 there.
Oh, yeah?
Yeah, I gotta get my hands.
All right, well, I'm just putting you on notice, me and you, and we got to get two other guys, so, you know? So. Let's start that process. You got 12 months.
He always talked about how discombobulated he got.
It's pretty crazy. You walk out at midnight.
You want to start it, Heather?
It stayed light until 10 o'clock.
Oh, we are live.
And we were just like,
We're
"Whoa,
all
what is
set.
going on?"
We're live. Our fearless leader, Rich, is on vacation, so our vice chair, Jeff Gorski, is going to run the meeting today.
So I got some big shoes to fill, so I'll do my best. Okay, so we are going to start out with the Tompkins County Development Corporation first. So welcome to the Wednesday, August 9th, 2023 meeting. And I'd like to call it to order. So first off, we're going to start with privilege of the floor, and we're going to combine the IDA and the TCDC. And I've got one here, Teresa Alt.
Hello, is this on? Okay,
Yes.
good. Yes, I'm Teresa Alt of 206 Eddy Street in the city of Ithaca. I have 3 points to make. One, repeating, the stately is exactly the kind of project that you should be supporting. After all, it brings a small amount of housing to some of the lowest income people in this city. Second point, when you do a public hearing, you really should aim at a public that goes a little beyond those who read the legal notices in a paper that hardly anybody reads anymore because it's so bad and so badly distributed. You do have money. You could advertise in a number of venues. And the third point is, after all, you are the industrial development agency, and you were put on earth to encourage good jobs. You can do this by attracting companies from elsewhere to come here, by encouraging startups. You do a little bit of both. You could also do it by working for better wages in the jobs that are here now. I don't know, have I seen any of you, for instance, on the picket lines supporting the Starbucks union? I mean, I spent quite a few hours on those lines. It was an attempt to raise wages and working conditions for the kind of job that exists in this community. As far as I can see, Starbucks is bent on committing suicide by closing its best locations just to maintain tyrannical control over the workforce. You could encourage companies to encourage union workforces. That would improve the whole economy here. Thank you.
Thank you. And my understanding, we have no written comments to read.
That's correct.
Okay. Next item is any additions to the agenda.
I just wanted to add that I did email the MRB group study on Monday. I had alerted you that it would be coming Monday and did provide copies as well.
Okay, great. Yes.
Yeah, I wanted to see if we could have a few minutes at some point in the meeting to talk about, what Teresa Alt said regarding advertisements, maybe broadening out participation in the hearing. So wondered if we had a little time for that.
Do that in the IDA meeting.
Yeah, could we?
Oh,
could we
sorry.
Save it for the
Yep.
IDA meeting and if we have time, I know we've got a packed agenda and then we've got to get to an executive committee as well. So,
Okay.
okay, but we certainly can do that. Business. So we've got the shared commercial kitchen project. Think we should probably put it on. So can we move this to put it on and then we can have some discussions regarding it?
I don't know if we necessarily have a voting item today.
Okay.
It's already on the agenda, so we don't need to move it.
Okay, great. So let's open it up. And I think we've got Tom. So if you want to step to the table here. We've got the MRB report in front of us, and then Tom has given us a response to that report. So Tom, can you highlight some of I don't know if everyone has had a chance to review it, but if you can highlight some of your responses within the report and then allow us to ask questions.
Sounds great. And I'll be brief. And I just sent this right before the meeting, so I don't imagine any of you had a chance to read it. And I apologize for the late sending of the memo. We just got it from Mike Ndolo on Monday, but wanted you to have the benefit of some of our thinking about how we're responding as a project team to those to the feedback that we got from Mike Ndolo and the MRB group. First, I would just thank you for hiring Mike and Ndolo and the MRB group. I mean, I think they were helpful. He was helpful and constructive in his feedback. He asked valuable questions and gave useful feedback that, we were able to respond to a little bit iteratively, although it was a fairly time limited engagement. I think, he was given direction to have a report for the board for this meeting. And so it went pretty quick. I guess I'll leave it at that. We worked to respond to his findings around, I think one of the really big concerns that he raised are the earned revenue projections from rents from kitchen users reasonable? And he raised that concern primarily by looking at the commissary in Rochester. And so, we had a chance to actually speak with the president and current director of the commissary to try to understand what some of the sources of, their less than robust revenues could have been, and just have an open dialogue and understanding and learning about differences there may exist between the commissary and the project that we're proposing. And so the response that I provided to you here sort of outlines a number of those differences, including, some really critical structural issues and decisions that they made early on that limit their revenue potential. And the director, Rhonda, was very open about that, and they're working to change those items. We will have the benefit of, their mistakes in a way, so that we won't make the same mistakes, and we'll be able to hopefully capture revenue. So those, I think that's, if I could go through all the list of his concerns or findings or conclusions, that was, I think, one of the most critical ones. And so we've worked to try to lay out why we think the projections for revenue that we've put forth are reasonable. Second, we've worked to clarify the organizational structure and financial flows. Put together a chart that's hopefully helpful with a narrative explanation to go with that. Happy to walk through that or answer questions that you may have about that. We also modified the financial projections based on the feedback that we got along the way from Michael Nadolo. We made them more conservative in terms of the ramp up period and earned revenues. We increased costs for staffing to bring salaries up to a level that he felt was a little more market rate, and include benefits, which hadn't been previously included in our pro forma. So we made some changes like that. Also, really importantly, we built in grant revenues into the financial projections, which we hadn't previously done, but we are applying for grants. We've received some grants, and we expect to receive others in the future. And so those assumptions were built into the financial projections for the first time. And then finally, I've also tried to lay out for you some sort of bad case scenario what ifs, right? Like if we don't reach the anticipated revenues and there's a shortfall, what happens? Does this thing just go away, or do we have options for responding to that? And we do. I think ultimately one of the reasons that the LLC with private investors and a not-for-profit operator structure was selected was so that we can be nimble and have the flexibility to respond in those kinds of scenarios. And also, just to remind everybody, the other reason that model was selected is for initial speed. We feel that there's a really important opportunity right now with this space at 700 West Buffalo Street that we could outfit very affordably compared to, starting from scratch essentially. And that's a time limited opportunity. And so we have to act with haste, and the private investment, the LLC allows for that. It's also a model that one of the kitchens that we looked at closely and had in-depth conversations with, the Food Fork Lab in Maine, used. And there's some benefits that we can take advantage of, such as the investors taking depreciation on the equipment that a not-for-profit, can't take advantage of. So there are other reasons like that as well. So hopefully that frames it for discussion, and that's what you wanted. I didn't get into any of the weeds on the memo, but we can do that as you have questions.
Great. Questions for Tom?
May I add one more thing?
Sure.
Not wanting a decision today. We're still working on putting in place the legal agreements, the private capital that are already conditions of the award. So, we'll come back to you when we are ready. We're not ready yet. So we're not asking for any decision.
Okay,
Deborah.
so I guess that means that the answers to some of my questions will be coming before we actually distribute funds. As in who the private investors are. You've got $370,000 in potential grant funders listed, but there's still potential. And also, I am assuming that or inferring from the way you described lease terms and paying for fit up, that's going to be on the LLC or the NPO and not the landlord.
We actually have had verbal discussions with the landlord where they have indicated they're willing to do some fit ups, but we don't yet have the details of those. And as Michael Nadolo correctly pointed out in his memo, we need to button that down.
Yeah.
Don?
So I think that just to sort of level set where we're at, we've actually already allocated this money to this project, subject to a satisfactory recommendation from MRB and 3 other contingencies, which are right at the end of our last minutes meeting at the bottom of agenda page 4. In my mind, I think the only real decision for us as a board at this point is whether well, I guess there's two questions that I think we should answer ideally today so that we don't have to drag this out a lot longer. One is, do we think that this report is satisfactory? And then the other is, do we want to add any additional contingencies? At which point, in my mind, ultimately, it's up to staff to determine if the various contingencies have been met and then just release the funds. There's not some further decision for us to make where we're going to get a bunch more information at the board level before that happens, unless we put that condition in now. So I think, ideally, we would make sure that, we are satisfied with the report, or we add some additional contingencies to make sure that, contingent upon, establishing some further information, we're satisfied. And then at that point, we can let these guys run and get their project done with staff support, in my mind. So that's the direction I'd personally like to see us go today.
What was the exact wording, do you have that, of the contingency for this report?
Yeah, so it's on page 4 of the TCDC agenda packet. Right at the bottom, it says John Guttridge made a motion to approve the allocation of
from the minutes.
$150,000 to the Friends of the Ithaca Farmers Market. Let's see, as a grant for the project subject to the TCDC funding a third-party analysis by MRB Group for the cost of $8,000 with a satisfactory recommendation to be determined by the TCDC, right? So we're determining if it's satisfactory or not. Other contingencies to be met prior to the release of the grant are the execution of a lease, securing pledges in form of signed contracts from other investors equal to the established startup costs and entity formation. So, there's some things, I think, in my reading of that, those things that are listed there cover a number of the things that were recommended by MRB, but there are some places where maybe we want to add some clarity or add some additional points or something. But, they're asking for clarity about the lease, and it's like, well, we're asking that they've signed the lease. So clearly they've got clarity at the point that they've signed one. So it's like there are things like that where I think there's some overlap and we can just sort of say, okay, that's covered. Whereas there are other things where we might want to say, oh, let's add a contingency or something.
So I'm wondering if we want to try and parse that out and figure out what we could say things are met today, or do you want to wait till some other things are met? Because it seems like we have the bulk majority of things that are met. I mean, for instance, if we move to resolution, now saying that these certain contingencies were met, to our satisfaction, do we feel comfortable looking at that?
So I would say none of the contingencies that you put on had been met. And this group should determine if first the MRB group study is satisfactory. The other contingencies from the motion from last month, you're correct, John, would be administrative. If these happen over the next month or 2 months or whatever, then the funds would be released. This body could also determine, based on MRB's study, is this satisfactory? Is this positive enough that you want to move forward? I would suggest that you might want to discuss that. And then, as John suggested as well, there's a list of conclusions about additional conditions that we might want to consider from that MRB report. So you might want to add some of those or discuss, the merits of some of those.
Yeah, so in my mind, so John, I'm agreeing with you that I don't want to necessarily drag this out, but I don't feel like I would be ready today to say that the MRB report is satisfactory. To me, it's the first step, and it's raised a number of questions that I would like. I think Tom has addressed some of these items, but I've got a number of questions I would like to ask associated with some of your responses before I feel like I'm ready to vote that the MRB report is satisfactory. They've done their work. Now I'm really asking Tom to address some of these big concerns before I would be willing to vote that it's satisfactory to move us forward.
Yeah, I mean, in my mind, I think that's the discussion we should be having right now, right? Let's go ahead and ask those questions. And then I also think, having read through the report a couple of times and carefully examined the conclusions section, which I think is really the thing that, at the sort of policy level, we want to kind of pay the most attention to. you know, some of these things, yeah, have been answered. And so I don't think we need to add a new contingency for them. But for the ones that haven't, I think that we probably could craft a contingency that would allow us to at least say, okay, assuming that they satisfy these points, then, you know, then the funds can be released. That way we don't have to spend a lot more board time on it. That was really my high level thought. I think that really it's like, let's get these questions out on the floor.
Yep.
And sort of as a group contemplate if, you know, if we're sort of, I mean, in my mind, I think the report was satisfactory. It raises some questions that need answering for sure.
Right.
But yeah, you know, they didn't say this is like an absolute flat out failure. They raised some concerns that I think some of which have already been addressed. Some will be addressed as the group continues their work. And that's where we need to parse in my mind.
Okay. Deborah?
I tend to agree with you, Jeff. My contingency would be that the points raised in MRB's memorandum were satisfactorily addressed.
Do people have questions for Tom at this point?
That's what I was wondering if there, you know, what else do we know now that we want to ask, you know, besides this or specific things in the report that, you know, if we can maybe kind of give us some directive, like these are the things
Agreed.
that people
Agreed. Should we just walk
questions that
through
have
the-
percolated to the surface and then.
So do you have some questions then for Tom? And then if we can just then make a list of specific items that I guess I would say, make sure that you highlight specific items that you want to say, okay, Tom, we need to have this information. And so maybe not today, but he'll come back in another month or provide us with information. So then we can, you know, see in the next meeting.
Yeah, personally, I don't, but I'd like to hear, you know, what other people have questions and maybe, I don't know, as far as Tom, would it be helpful if people that weren't here, if we ask them to email you questions, or is it okay? They might come up because we have a couple of people that aren't here, that they might come up next month. I'm not sure if you have a time frame that you're hoping to get this done by, or does it matter if it takes a month, 2 months?
I'm very happy to attend the meeting next month and answer questions if you'd like. And by then, you know, we'll probably be a little further along on some of these items. as well.
Okay,
Dixon, I know you had your hand up, so let's have you.
Yeah, well, to that point, it doesn't, you don't have to answer this right now, but it would be helpful to me, because I'm a simple-minded man, for the conclusions, just go point by point and answer them each. And you kind of did in your response, like you combined a few bullet points into one response, and that's totally fine when I have more time to read it again. But again, for a simple-brained person, it would be helpful to hit each of them individually. It would help us then decide what we need to attach to as additional conditions going forward.
Would you like me to give my thoughts on them for discussion? I mean,
You mean each of the bullet points that they've put into the
yeah,
report?
I mean, I think it could be pretty simple. Because I only see one that might require discussion.
I think my preference, Tom, would be because we've got to Dan's point, we've got 2 members missing. So maybe after this meeting, if you can then take what you've already done, but create it in a more simple way for Duxon's point, you know, go point by point, but
Yes.
what they've put in.
I understand what you
MRB.
want, just like a 1 page.
And then any other questions that we've generated today, because I've got certainly some questions as well. And then if you could address those, you know, within kind of a written report that we can then use for the next meeting, send it out to the members well in advance, so then they can be ready.
Can I perhaps propose this like that? I think we should just go through, there are 9 points right here. I think we should just take each one at a time. Have a brief discussion about like, do we have serious concerns about this or not? Do we feel like it's already been addressed, et cetera? And see what comes out of that discussion. And if the answer is like, well, there's one thing that might need a little bit more information, let's just add a contingency, accept the report and move on. I feel like we could waste a lot of time very carefully scrutinizing something that we just paid someone $8,000 to very carefully scrutinize. And the business that's running it is going to very carefully scrutinize it. And considering the size of this grant compared to the incentives that we typically give, I think we're working too hard at this personally. So
Okay.
I'd like to see us just go through these 9 points, determine if we have ongoing concerns after having Tom's response and any answers he gives us now, and consider adding contingencies or just accepting it as satisfactory otherwise.
Fair enough. Anyone else comments on that? Okay, you got the report in front of you, so if you want to start with the first one.
Sure. The first is securing a contractor quote for the approximate costs of fit ups of the premises to accommodate the project. Yep, we need to do that. We're working on it. Yeah.
Do you feel so?
I did say in the memo that our assumption at this time, based on the condition of the kitchen, and on statements that the landlord has made to us verbally, is that, you know, those costs should be pretty minimal. That said, you know, there will be a cost, and we should understand what that cost is, and we should understand who's paying it. So that bullet, the second bullet regarding clarity about the terms of the lease and who will pay for fit ups is in that same vein, as is the third bullet, providing an explanation as to how any fit ups not paid for by the owner would be handled. So
That's all.
have-
Those three are kind of just one
Yeah.
big topic.
And ultimately that all should be handled in our first contingency, which is the actual execution of a lease. Presumably you won't execute a lease if you don't have clarity on who's paying for fit out, how much it's going to cost, et cetera.
that will be part of the lease negotiation.
So let me ask you then, Tom, because I think you had mentioned in here that you had done some revised financial statements. So obviously some of it's missing because you don't have some of this information about what you may also have to pay for the build out.
There's an assumption behind there that the 150K for equipment, you know, if we decide, if we had, say, 20K in fit out costs, we could reduce the amount available for equipment to 130. You may remember that there was a range of 100 to 250 that we could spend on equipment if we bought used or new. So there's some flexibility within that line. So that's assumed. And then it's assumed that the landlord would cover some of it. It's possible that we may need to add an additional line in the financial projections for fit out that isn't there now. But right now those are the assumptions in the pro forma.
Okay.
I mean, in my mind, those 3 points are just covered already by our contingency one. We could add some language that specifies that any lease agreement shall include clear delineation of payment for fit out or something like that. But I also sort of have an expectation that people who have a couple $100,000 of investor cash on the line aren't going to sign a lease without knowing how much their build out's going to cost. So I don't know what others' perspective on that is.
Yeah, to me, it's kind of a given. I kind of feel like we're micromanaging that if we didn't have that confidence that that was going to be done, then, but I guess I'll just rephrase that. I have confidence that that's going to be done.
Fourth
I
one.
move on to 4. Providing a narrative of how the LLC will operate, the terms of the sublease from the LLC to the sponsor, and how the potential return on investment to the LLC owners will be generated. I've provided some of those. Well, I provided the details as I have them today to you in the response memo that I generated. The specifics of that will be memorialized in 3 separate agreements: the term sheet with the investors, the LLC operating agreement, and the sublease agreement between the LLC and the not-for-profit operator. And so I would suggest that contingency is covered by the contingency that already exists to have those agreements in place.
Got a few questions on this. I'm going to just reference this then, if you can look at that. So we've got the private investors. The money's going to go into an LLC. Do we have any sense as to who's going to be the manager of that LLC?
Yeah, our working assumption is that some of the private investors will want to be part of the management of the LLC.
Okay.
So it'll be a manager-managed LLC with some of the investors choosing to be more involved and some of the investors choosing to be more passive investors and letting the other investors manage it.
you envision some of the investors in the LLC being on the nonprofit board as well?
We haven't thought about that yet.
That might be a conflict.
Yeah.
Yeah,
Okay.
that would be my concern.
You'd have to get Carrie's advice on that.
And then in terms of getting the money from the investor money from the LLC to the nonprofit, I know you talk about startup and initial operating. My assumption is that is just going to be a loan into the nonprofit organization. So then you'll have a fair market value interest rate in terms of getting that money back out.
Not quite. It is right to see it as a soft loan, but the repayment of that will be subject to cash flows.
Right. Right. Yeah.
So-
I'm not worried about the term of the loan. I mean, I'm assuming you're going to have interest only and then permit it as cash flow permits, you pay principal or something like that, right?
Right.
Okay.
I
Got
mean,
it.
that's this additional rent though, right? That's really where that comes in.
Yes.
Well, I mean, to me, the loan is a repayment term and any additional rent is really basically the profits of for the LLC. So the investors could get a return on their investment is how I was.
I mean, that's
Thinking about
not
that.
how I read. I'm curious.
No, it's,
I read this.
I mean, it's the way that the current thinking, and again, this agreement doesn't exist yet. But it's about to get very real in terms of which direction we go. That is one option. The other option would be that the LLC owners would have an equity investment and they would just take dividends. And then, there would be an option for the not-for-profit operator to buy out the investors and take a greater ownership share in the LLC, which is, allowable under New York state law, which would give them more control over the LLC, right? Or for them to, sell at some point and have an exit that way. So I think there are some options, and the loan with terms is one of those options, and it hasn't yet been decided which option is optimal. And that'll really be a decision of the initial, key primary investors that are advising us on the right structure right now. So.
Questions on number 4?
I would just add, part of that on number 4, I think in talking to Mike Andolo at MRB Group, it's tied up in the not being able to understand the financial projections because there's unknown about, what the burden of repayment and, income to the LLC or the investors would be. So you can't, that was part of, it's tied up with this because you don't have that structure together yet. You don't have it really negotiated how the money is going to flow and what the repayment's going to be. I think that, that's somewhat addressed in your original approval, the entity formation. But related to that and the second part, of that 4th bullet, that potential return on investment to the LLC owners and how it will be generated, I think is tied to some of Michael's other comments about the pro forma financial statements, that, a professional should probably be putting those together, because there were a lot of just things that are pretty basic financial statement 101 that, if you're not an accountant or a professional that does this all the time, you don't know what goes where. So it was, there were some conversations I understand back and forth, and the group, took in that information and revised their pro forma, and Mike did take a look at that pro forma. But I think there's still a little bit more higher level that might need to be done to really understand. I mean, for example, there are months where there's negative cash flow. What happens when there's negative cash flow? You can't pay your rent or you can't pay your employees. What happens? So I'm rambling, but I think that's, part of what's wrapped up in here.
John?
Yeah, and I mean, in my mind, I think that really we're asking for, before we release our funds, the securing and pledges in the form of signed contracts from the investors. those investors are going to have like very direct skin in the game. I don't think you will secure those pledges if these questions haven't been adequately answered. I mean, and there's more money coming from them than coming from us. So, I think, again, this is sort of a question of, I think that in Tom's narrative, which I did get a chance to read before the meeting, he talks about what happens if we have, if things go poorly, like what are our options, where are relief valves, where do reserves come from, et cetera. I think that, for the level that we need to be discussing, in my mind, this is already covered by our contingency number 2 and the necessary steps in order to secure that and the narrative that we've seen there.
I think 5, we don't need to go over because we've already got that as a contingency number 2. So number 6 is revising the pro forma financial statements.
Yep. So those are, I mean, we're going to be reforming or refining those on a regular basis until some of these agreements are in place. I don't have a problem skipping ahead with, getting some more help. More help is always good, and more eyes on the financial statements. So that'll help with that. I think the meat of number 6 is about the revenue, right? I mean, ultimately, we've put together a feasibility study that had a certain methodology. We've taken the input from Michael Nadolo regarding his concerns. We've followed up with the source of those concerns to ask more detailed questions. And we've revised the revenue projections downward. So, yeah, I'm happy to share pro forma. This is an open book, community economic development project. So more eyes are better. We'll share the pro forma with you. And ultimately, I think, you have to believe in the reasonableness of the revenue assumptions and the explanations that have been provided. We'll continue to dig and respond to questions. That would be my response to that.
Let me ask the board members, are you going to want to see a revised pro forma financial statement to be able to accept the report? You do not. Ann?
I would. Yes. I would, yes.
Okay. I think I would too. So is that something you guys could, before our next meeting, provide us? Give us a couple days to a week before the meeting?
Yes.
And then you had mentioned in your comments that you had already secured some grants. So, and then you had in your comment section there, you had already listed potential grant funders. So within this grant funder, have you already secured definitely some of these?
We've secured the Ithaca Urban Renewal Agency grant, which is to support operations by providing a rent subsidy for low to moderate income micro enterprises, which we feel will help, with occupancy because it'll expand the pool of potential users of the kitchen.
Okay.
We have applied for and have been invited by the Regional Project Review Committee to apply for a Appalachian Regional Commission grant, and we are we're in the process there. The next and final application that goes to the state is due in September, and we'll find out sometime second or third quarter next year if we've received that grant, but that is in process and looking very positive.
Okay.
And the others listed, other than TCDC, of course, have not yet been applied for, but we've done preliminary research and have them kind of on our radar to apply for.
Okay.
I wonder if maybe you would consider just making the pro forma another contingency, and maybe not next month, but giving them the time if, they're wanting to generate more investor pledges and, you know, I mean, it's going to be sort of a revolving document. I think that one of the concerns that Mike and Dolo sort of brought up is that, you know, in looking at other commercial kitchens, they're subsidized. About 50% of their revenues come from member revenue and the other 50% from other subsidy. They've got $35,000 in subsidy from the IURA. That's, you know, not 50%. It's not close to 50%. The ARC money would be helpful in terms of operations. You know, a USDA commercial facilities grant would be capital monies for, you know, additional things that wouldn't cover shortfalls. So, you know, I think maybe just give them a little bit of time to digest some of that and incorporate that into their pro forma. And understand, you know, some of the things in the pro forma are startup costs, which shouldn't really be in a 5-year operating pro forma.
Yeah, I mean, I think in my mind, if we're gonna, as a board, ask that we see a pro forma from the applicant before we accept it, we need to be really clear about like why we're doing that and what we're even looking for in that pro forma. I mean, you know, it's that, well, we have seen them in the past, like we don't actually have. I mean, when we asked MRB to review it, they raised some issues. Typically, our staff reviews performance for projects. We don't. It actually would be pretty unusual for us to do so. I mean, I think I'd personally rather follow Heather's suggestion here. And like, if there's something specific that we want to address, let's identify that for staff rather than, you know, like having them show us another spreadsheet that, I mean, quite frankly, most of us here aren't really that attuned to reading, you know, commercial pro formas from operating businesses. So, I mean, I think we should talk about that a little bit of like, what are we actually asking to see why, and does it make sense? And should we just add a contingency around it?
Deborah?
Yeah, I think my why is just a concern that this be sustainable for at least the first 3 to 5 years without running the risk that they're going to have to come back to us and to other local community sources begging for funds or else collapse. That's my concern.
I think, appreciate your comments, John. I think my preference would not be added as a contingency, because as Tom had said, I think this is going to be a moving document. And to your point early on, you had said, look, some of our backup is these investors are going to be looking at it too. So I don't feel like, you know, it's going to be a rolling document that I don't want to necessarily put in as a contingency. I think my preference would be to have it, to have them give us their best guesstimate a week before our next meeting. So then we as a board could get comfortable with it. And then I would feel better then to be able to accept the MRB report if I see a revised, whether it's going to be final or not, and then still have our 3 contingencies that we've got in here. Yes.
I think that having us scrutinize the pro forma at the board level is an opportunity to invite a pretty big pile of sort of like, you know, I mean, a pro forma for something like this is going to have like a big pile of lines on it. And it's like, are we really going to go dig into the like, you know, nitty gritty details of this, that, and the other line, and how did you arrive at this number, and et cetera. And I actually don't think that's an appropriate use of the board's time. I think that, you know, we can, if we have concerns, you know, it's like, let's memorialize them. They've specifically identified this issue with the revenue. The applicant has responded in writing to that. You know, I think that, yeah, I think that it's a strange exercise for us to look as a board at a pro forma when we do that for none of our other projects. And our model in general is that we don't take the risk. We're asking private individuals to take the risk, right? So the risk here, the downside risk, is on these private investors that have $200,000 of their own money. And if there's a shortfall, then they're going to have to pony up to keep paying the landlord, you know, to make sure that this thing keeps going. They're going to have a lease that presumably that landlord's going to want to see some number of personal guarantees on, or the landlord's going to want to see some amount of security in the bank. I mean, as a landlord, that's a thing that's like, if this brand new LLC showed up, I'd be wanting to know what they're, that they were going to be able to survive the lease term. And I don't think that it's appropriate for us to scrutinize that as a board at that level of detail, which would be, if we did, would be unlike any other project that we look at. We're not taking a risk here beyond the $150,000. And, there are individuals who have a vested interest in making sure that this goes well and survives a lease term. I mean, perhaps we could suggest, and I could very much support something like suggesting that the lease that we're asking them to execute in our contingency one was a term of at least 3 or perhaps 5 years. At which point then that's going to put some real scrutiny from the landlord on, can this tenant actually make it through that lease term? I don't know if that's something that might help add comfort for folks who are feeling a little uncomfortable right now.
And
Yeah, I agree with all the other checks and balances that there's going to be, especially with people expecting a return on their investment. And I think it actually, for me, not having the expertise for myself, and maybe a couple of us do, but I think as a board, we don't have that expertise to really evaluate and kind of almost okaying the pro forma. I feel, to me, that almost gives it like a false sense of okay, or, that we said that this is, looking good, the pro forma. I don't have the ability to do that. So to kind of look at that and to say, yeah, that means something, to me, it doesn't, because somebody else could look at, some other agency could look at, oh, they signed off on it. That was okay for them. I don't know I don't have the expertise myself. And to John's point about, we haven't done this before for other projects. Why would we start now?
Have we given away money before?
Oh, yeah.
Yes.
Okay, well, it's my first time.
The IDA has granted money to childcare organizations less than $10,000 for PPE upon approval of invoices, which was administrative. And, I understand where you're coming from, and I understand the reticence on, a pro forma. The reality is that all the projects that come through this IDA, there's a staff level financial review, and there's a recommendation from staff. And,
Right.
The staff have some of that. This one, was sent to the IDA without staff being involved. And here we are. And I understand it's a much smaller project. And, if the IDA is comfortable with these other contingencies and knowing that there's going to be some scrutiny with those investors, I think that there may be some level of comfort there for you in moving forward.
I mean, we also give $500,000 to Knickerbocker for their equipment.
Yeah.
With very little scrutiny.
Right. How much was that? Like a couple $100,000.
$500,000.
$500,000. And the pro forma, we didn't look at
Which none of us saw a pro forma or any kind of.
I would
No, but
Let's-
staff
different, but
staff
we're securing
saw
equipment on that.
staff
though,
saw
so-
financials,
This is
staff
grant.
saw tax returns. Like there was a lot of back and forth of information.
Deborah?
But not
Yeah.
the board.
I guess my problem with this at the end of the day is that the problem that I articulated in my email, which is, it just seems at this point that we're talking about giving a not insubstantial amount of money to people we don't know who they are yet. And the sustainability of the project depends on those investors and grants that are on people's radar. We don't know if they're going to get them. I've just seen projects that got off to a great start with lots of optimism and then didn't survive, or else survived only with substantial subsidies from public sources and other sources. And I don't want this to be one of them. It doesn't have to be a pro forma. I would just like to have enough information and a better idea of what the business model is. So I don't feel like I'm investing in something nebulous that may or may not fly. I don't know how to structure that within the context of the TCDC and the IDA. I'm new to this, but I'm looking for some comfort and some confidence that this thing's going to work.
So I want to be conscious of our time, and we do have a hard cutoff at 4:00. So, John, I hear what you're saying on this, and I'm not necessarily advocating that we go line by line and scrutinizing that, because I would agree that's not worth our time. I think then, but for me to get a comfort level, which was addressed in MRB, I would like to see a revised pro forma from them. Not necessarily that we have discussions with it, but I would like to understand as part of their responses to these 9 points that we have a revised pro forma in it.
But I mean, so who's we? You want the staff to see it or you want us to see it? I mean,
I
perhaps
would like it to go to the board.
we could have a, yeah, I mean, I think that's inappropriate.
That we don't necessarily, maybe we don't have a discussion at the next meeting,
No.
because I would agree with that. But I would say, as a board member, I would want to see it, and then we have the staff evaluate it.
I mean, how about we put in a contingency that the staff satisfactorily reviews a operating pro forma?
That would work for me. I mean, we
No.
rely on Heather and the staff to review performance all the time.
That's how we do it.
Okay.
Yeah,
Okay,
Well,
so
look,
how about this?
let's-
Can I just,
Get the okay from Heather too, if this is going to be staff. We're
This
asking.
is a little personally too close. You know, I want the project to succeed, but at the same time, I want to be realistic. I was involved with the wine center, and it was not pretty for the entire community. They were not adequately capitalized, and they didn't have a really feasible operating plan. So, I think that there would be benefit for this community. I just feel like I'm way too close to it, and I'm not really very comfortable. I mean, if I look at it and I see that there's months of negative cash flow and they don't have, adequate income to cover their operating costs, and they don't have, a payback structure that shows payouts to their investors, then,
then you say no.
I'm gonna
We
say
will
no.
have all that. We actually have all that,
Well,
but we can, I don't have any problem providing it. And another thing that I was thinking about, Deborah, in response to your suggestion was, something that we did for decision makers around the conference center, much bigger project, but similar questions around risk, financial sustainability is, we put together risk analysis, like scenario based, and what happens if, and so we can do that too. I've been thinking that would be a good exercise, and we can do that if that's helpful to, put together, a scenario based risk assessment. And that would be for me, I don't have any skin in this game other than that I think it is a good project that I'd like to see succeed, right?
I think we'd all like to
I'm
see
a
it
public
succeed.
servant, and so I can put on my spreadsheet lens and make sure that, it makes sense and share the data with you and do that analysis. And I'm close to it too, obviously. And we're not always on the same side, but I think I'm happy to do that work and go back and forth. I mean, look, nobody wants to back a project that's not going to be successful. More eyes on it is helpful. And that's where I'm coming from. Happy to do whatever work is needed to clarify for the board, and maybe some things haven't been fully clarified that are built in but aren't daylighted, and we can just daylight them.
Don, I think you were gonna make a proposal.
Yeah, I mean, I personally, I just feel like this project has been through, this is like, we're going on like 6 meetings about this project. I personally would like to, actually, I'm just going to go ahead and move to accept the report and as satisfactory. And if we want, I would be happy to entertain an amendment to add a contingency, but I'd like to move to accept the report as satisfactory.
I'll second that.
Yeah, well, I'll start it, as I say, I support that because I think the report is satisfactory.
Yeah.
The team's response may not be, but they have we're going to give them time to do that. Actually, coming around to Jeff's point of view, I think it's a good exercise for the project team to amend the pro forma, do that risk analysis and share it with us. And then if we have any, I think we may not have much to offer. I'm certainly not going to be one of those who can go into great detail on it, but you never know. It might be helpful and it'll be more, yeah, I think it would benefit the project team and then we can just kind of check it off our box and I would feel better about it.
I mean, I think the important question here is there's something else that we're going to need to see. I mean, speaking as someone who's done a lot of these kinds of projects, like you need to know what the sort of goal you're trying to meet here is, right? And I think there's a real lack of clarity in our feedback to the project right now of like, I don't know, like just make me feel better is what I'm hearing here. And I mean, I don't mean to trivialize your concerns. I saw the wine center explode too. I don't want to cast this project in that project's light, but it's like, if we could be specific, I think that would be very helpful to this team of like, what is the actual problem we're asking them to solve? Is it the months of negative cash flow, which,
Yes.
so it's like,
How are they going to
and what
get
are the-
through 6-8 months of negative cash flow if that's what happens?
right? So
That's the risk assessment.
So maybe there's a compromise here that, if there were professionally prepared startup budget, 5-year pro forma, that would be fine.
Right.
Because there are buckets of things in the wrong places and that impacts things and they don't know what the payback structure is going to be yet. So give them a little bit of time to think about that. And if they're professionally prepared, at least we know everything's in the right place.
and so that's something that you feel like you could evaluate without worrying about feeling too close to it,
Absolutely
because it's like, okay, do we have that or not? So perhaps if we add that as a contingency, then at that point we can kind of break the logjam here. That satisfies what your concerns are. Like, do we feel so I would suggest maybe that's a friendly amendment to add a fourth contingency that they're professionally prepared 5-year operating performance. What period of time are we asking about? 5 years? Is that seem-
Well, I would add, mind if I just add? So the 9th item was the recommendation was a professionally prepared financial statement.
Right.
So if we're accepting it today, voting on it to accept today, then in theory, we're saying that they have done that, I guess, or
No.
They have
put it as
to.
a-
I don't.
they have to, I
We're-
guess.
We would add that as a
Make it explicit.
contingency. So before the funds are released, the staff can evaluate whether or not that's been done. The staff can circulate that to the board.
Okay.
If we're not going to have a conversation about it anyway, once we have it, then it
Okay.
doesn't really matter whether,
So I could vote for that if we add that as
Okay.
that. So do you want to
Yeah, I see
revise
that was a
your?
friendly amendment. So then, right, I'm moving now to accept the MRB group report and to modify our allocation of the $150,000 to add a fourth contingency, which is that the sponsor provide professionally prepared 5-year pro forma financial statements. Does that seem? And Ina, did you get that for the minutes?
Okay,
Excellent.
we have a
I'll
second on that. Okay,
So that's a revised one. We're taking the other one off the table.
That was an amendment, but sure.
let's take
So
that
do we-
one off
we
the
can-
table. This is a revised one.
So we can just vote once then, I guess.
Let's vote once. Yes.
Okay.
Okay, so let's vote so we can move this on. So Duxon,
Yes.
Deborah,
Yes.
Ann,
Yes.
John,
Yes.
and I vote yes as well. And we have 2 abstentions. Okay, thanks, Tom. Appreciate it. Chair's report. I do not have anything. Staff report.
No staff report for the Development Corporation.
I would note we've got our financial statements in there.
Yes, they are.
Okay, minutes, June 14th. So do I have a motion? Ann?
Yeah, I'll move
Second?
them.
John? Okay, all in favor? Aye. Anything else that comes before? Believe so. So motion to adjourn? John, Ann seconds. All in favor? Great. Okay, let's move on. The IDA. So now we are opening up the Tompkins County Industrial Development Agency, Wednesday, August 9th. Call to order. I think privilege of the floor we've already covered. So any additions to the agenda? Yes, John.
I'd like to add a discussion and possible vote on a modification to our UTEP to the agenda.
Okay. Do I have a second? Ann, seconds? Okay.
Oh, I mean, should we do it now? I think Ann also had an addition to the agenda.
Yeah, so I wanted,
Put that under business.
yeah, I wanted to
Yes.
propose adding some discussion about our the public hearings that we have as far as advertisements and including inclusion issues.
Okay. Do I have a second? John, all in favor? Aye. Okay, any other additions? No? All right, so John, let's work with yours first.
Yeah, so circulated via email and also should be on paper in front of you. I will note that there's one change that I added to the email that wasn't on the printed version of the paper, which is in the sentence immediately following the sentence that's in red there. We're replacing the word incentive with pilot payment amount to clarify that the 12% of projected net operating income is the amount of the pilot payment, not the amount that it decreases your tax burden by or anything else like that. I think everybody has this in front of them. So, I mean, I guess I can go ahead and move this change to the UTEP. And then we can have discussion.
Second. Deborah, great. Discussion?
I just want to clarify, this is in connection with possibly modifying our policy about cutting 50% of the processing fee.
Yeah, so I mean, high level, basically, Ray, we've been asked to reduce the fee for the project we're considering later today to 1/2 of total hard costs, 1/2 of 1% of total hard costs, not 1/2 of total hard costs. That would be a big fee. This is something that we've done very inconsistently in the past. I don't remember the exact list, but it's like Art House didn't get it, but the Asteri did, and INHS did, and somebody else didn't, and it's been just inconsistent. And so in my mind, I think that if this is something that we're going to do, we should do it consistently and apply it evenly across the
And there should
board.
be an objective standard,
Yeah.
yes.
And then this also brought up this issue, which is that in section 10 of our UTEP, we describe an affordable housing project as being anything that's eligible under 581A of the real property tax law, but that could include projects in which only 20% of the units are affordable, at which point then we'd be providing a very, very, very deep subsidy to an otherwise market rate project. This is a very, very generous subsidy program. It's about 1/3 ultimately of what my projected 581A tax rate would be. I think that we want to be careful not to do that. So we added this language about really we're talking about projects that are fully affordable here, not projects where only 20% of the units are affordable. So there's two pieces there that specifically, identifying that our fee for these projects instead of 1% of project cost would be 0.5%. And then secondly, further clarifying what we mean by an affordable housing project to talk about this other exemption, which is also going to apply to the stately incidentally.
Question. So this would apply to whether it's a not-for-profit organization or a for-profit organization doing the affordable
Correct.
housing. It doesn't matter. And I believe you said it's 100% needs to be, no, I'm sorry.
Yeah, it's a little confusing here, in which all housing units are subject to an income test.
Okay.
And are affordable to households earning 100% of area median income or less. And this is an interesting point that we could perhaps have a little bit of discussion around if we want to. I think that there's been certainly what I've heard in the community talking about housing affordability in general is that, we see a lot of these projects at 20, 30, 40, 50% AMI, and we see relatively few of what we would refer to as workforce housing projects, which could include housing for folks
80 to 100
that are 80 to 120 or whatever, right? So it's like, this is sort of like, okay, well, let's say 100% or less AMI. And that was just that number could be anything. I feel like it's got to be at least 80, but if the board feels it should be different.
I think the intent when we wrote this policy was always that it would be 100% of the units would be affordable. So this is really just clarifying that. I think I would make a recommendation that you stick with 100%. If by far chance there was a project that came in that were a rental project that were up to, 110 or 120% of median income, you could deviate. But having been involved with the community housing development fund, like the number of rental properties that would fall under that have been 0. So I think the likelihood would be very low. I mean, the agencies are really focusing on the for sale units at that income level.
Yeah, I want to thank John for thinking about workforce housing. And I would hope that something like this might encourage developers to think more about workforce housing. I think right now there's this, either it's low income or it's market rate, and people in the middle get forgotten. And that's really where we have quite a lot of need.
But the reality is that you're financing through HDFC or you're doing low income housing tax credit, and you can't compete with 120% of median rental project. Like, you're getting more points with the 60% or a 90%. So they just don't get funded. Like, financially, they just don't work.
I mean, at large scale, there's something smaller that could use a small building participation loan program could absolutely attract this kind of capital. And something like 327 West Seneca, which, I mean, that project specific problems aside, there are others that have operated at that scale as well.
Yeah, I want to thank John for helping us clarify this, because I think for me, this is where what we've thought about and kind of like the decisions that we've made. So this not only clarifies it for us and future IDA boards, but also as Deborah and others said about for the developers too, they can see this in writing. Here's our intention. Here's what you're going to get. So I thank you for doing this.
Are we ready to vote? Okay, great. Tuxon,
Yes.
Deborah,
Yes.
Ann,
Yes.
John,
Yes.
and I vote yes as well. Okay, I believe we have other business. We got the IDA, public hearing notices. So Ann, do you want to talk about this?
Yes, I'm not sure if anybody responded via email today. I haven't been in meetings all day, but I sent an email out to a couple of the folks yesterday afternoon, just at the last public hearing last week. Yeah, I think it was last week. So at the last, I was going to try and make it in person. I think it's helpful, and I've heard the public say that they'd like to see more of us, the board there. So at the last minute, I couldn't make it, so I tried to Zoom in. And we don't have Ina was off, and it wasn't a lot before the meeting either. Anyway, not saying that she would have been available to do that. So I'm just wondering, can we just, as a matter of course, send out members of this of the IDA board and links to it, so we can have it if we can attend at the last minute, or whether we're attending to or not, but not that somebody has to request ahead of time, that meeting link. So like, this is what we do for other meetings, and we don't have to be there in person. And so I'm asking two things. I'll ask the second thing is, for the public hearings, we don't say anything about a Zoom link being available to the public.
Mm-hmm.
So can we do that and say that you can also attend by a Zoom link, and then that I could see you need to maybe request if you want. Ahead of time.
I don't have the bandwidth. If 50 people were emailing for a Zoom link, if Ina's not in, like, I don't have the bandwidth to provide a Zoom link like the city of Ithaca does for a planning board meeting.
Well, let's take one part of it. How about for IDA members? It's just one email to the board? Can we have that? Is that possible with staff? Can you use your mic so we can, yeah.
I would say for administratively, I would cut it at the board member level. And only, again, thinking of the administrative burden that, again, if you do get a project where, again, statutorily, we're doing everything we need to do and we publish these notices. if for some reason, all of a sudden 60, 70 people are all of a sudden calling, needing links, which are technically in the notices themselves, there's a link provided in there. Then you
And-
kind of,
I don't have a Zoom account that would allow me to have more than 50 people in a meeting. I don't have any IT staff at all. I mean, we pay a consultant to help us with that kind of thing. I just want to ensure that if we're sending a Zoom link out for IDA members, that doesn't conflict with any open meetings law.
I mean, really what we could essentially do is just provide the board members with a copy of the notice that gets sent out to the taxing jurisdictions, which that would then include the link.
Is there a Zoom link right now?
No, it doesn't have a Zoom link.
I mean, it does have the Zoom YouTube link. and
YouTube. not-
Right now, and
Zoom.
Annie could have joined via YouTube.
I did, but
And watched.
I don't look like I'm there, so I want to be there, so I want people to see that we're there. So what, if it's just, so let's just separate out that staff for IDA or IDA members, can we get a link that we could attend? Is that burdensome? And then
Yes, I would ask the attorney, is that allowed for us to do that?
we're not making,
Yeah, this is Russ. I apologize, not for being there. If you want to have a separate link and putting aside the administrative burden that potentially could create, you can do that. And so you can participate and see versus personally being there. It's just a matter, as Heather noted, that administratively could be burdensome.
But it's
Well,
not an
for-
open meetings law violation because the public
No.
hearing is not something that require a quorum, and that's when you start having problems. with
or
open
just,
meetings.
or votes, right?
Right.
That's exactly right.
John's got some comments?
Yeah, I mean, so I actually just yesterday attended an IURA meeting, and what they just publish a single link in the agenda to the meeting with the password that puts the public in the waiting room. If people want to participate in the meeting, you don't have to take a phone call from them or read an email from them or anything else like that. And it provides the public with a better opportunity to come and participate in the public hearing, which I think actually would be something that we should support. If we need to spend a couple of bucks to get you the higher end Zoom account or, whatever else that looks like, I think that is a relatively small burden for what I would describe as a pretty substantial benefit. We're giving away quite large incentives. We should be able to provide the public with an opportunity to have their voice heard.
Well, and
Yeah,
I,
John, this is Russ, and I my only response to that is, look, we're required under, and I don't mean to be the lawyer kicking the can down the road, we're required to provide notice of a public hearing at a place, at a time, and if you want to make it a Zoom link as well, we can. I mean, Heather and her team would have to undertake that. We can do that, but to make a comparison to IURA, it's just not the same thing. It's a different animal.
All I'm saying, Russ, is that the technology exists and it's not actually that hard to do. The thing that, and also, I mean, so it's like we're meeting the minimum standard, but I think that the minimum standard is the minimum standard, but it's not necessarily doing a good job of public engagement. And I think that this is something that we have heard routinely. Honestly, I'd be somewhat surprised if that many people were even paying that much attention or showed up. I mean, maybe the occasional contentious project, we've had some people in the room. But I mean, speaking, it's like, I'm someone with a, more than full-time job and small children. It's hard for me to go to public meetings, but I've been to a few of the evening city meetings on the Zoom link because I can do that, between dinner and bedtime. I feel like it's a really valuable public engagement tool that I think, while there may be some setup burden to get there in the first place, there's not really a lot of ongoing administrative burden.
Yeah, right. And John, I agree with that 100%. The problem you're going to deal with continually, whether you're in Tompkins County or Steuben County or Orange County, is there's never a perfect time for everyone. There's never going to be a perfect time, be it in the morning, be it in the evening, be it midday. There's never going to be a perfect time. So you're going to have people that might be out there that are either in support of or in opposition to a project saying they didn't receive notice. And that's just not true. It's just not true. They received notice. And you know, Heather and her team and the board set the time and date, and we assist with that. But you're never going to find a perfect time or place.
Yeah,
Right,
I feel like that's a great reason to have the Zoom link.
What we're talking about, at least from my point of view, is more inclusivity. You have people with mobility issues, transportation issues, people with children, jobs. We're talking about environmental issues that people don't have to drive time-wise. So if we had a Zoom link, I like the idea that it's provided. I've seen that in some other municipal meetings. You know, we put people in a waiting room here at the county. We don't let them go on video just because, you know, some people have been, I guess, Zoom bombed. I don't know what you call it, but
They like to
holding
say
up things.
regrets.
So,
Yeah,
so if they're in the waiting room, there's no extra, they don't have to request that, you know, you could say they have to put their name. If they're not putting their name, you know, on their thing, then maybe you don't let them in one at a time. But is that a possibility? Because at least for me, I would like to be more inclusive and get more participation from the public. We've heard that criticism before, over the years. We've heard that. And even if we hadn't heard that, why not? The technology is there. Why can't we do this?
Well, you have staff here that can let everyone in the waiting room, that can set up the panelists. You have me. Like, do you really want to pay me to be doing all that? I don't know. I'm happy to do it if this body wants me to do it, but I will remind you that this has been, you know, an ongoing discussion. There is no legal requirement that IDA members need to attend a public hearing because you can view it on YouTube. Everything's up there for live and for time immemorial. You receive copies of the minutes. It is a courtesy of the members, a public authority, not elected members of the board, to attend meetings and, you know, show people that you are listening. You do have other ways of listening. And for the public, we always have provided an opportunity to provide a written comment. And, you know, people do provide written comments. So, you know, there is access and there is opportunity, whether it be in person or with a written comment. I think maybe we do baby steps and we try and just send a Zoom link to board members. If board members, you know, want your constituents to see that you're paying attention and you're present, even when you can't make it physically in person. I mean, I understand that. I mean, maybe we start there. I mean, the public, we don't get 800 people from the public saying, I wanted to submit a comment and I couldn't do it. If we were to allow for some sort of Zoom opportunity, would there be a lot more public participation? I don't know that there would.
So if there's a couple of people, why don't we try that? I mean, I'd be shocked, and I'm sure there's probably just a couple of people maybe that would come in for the public hearing, and we can see if it's onerous, we can go back and say, no, you have to submit.
There's a comment from Rob Henry that might be relevant to this.
Yeah, if I have to figure out how to set the whole thing up, I'll set it up that way. I mean, if I have to set it up as a webinar with panelists, and I mean, I'll figure it out. I figured Zoom out.
It only took us 3 years.
No.
So is this something that we need to vote on at this point, or is it, should we wait to have Rich and Todd have their input as well for next meeting? I know we don't have a public meeting coming up here because we don't have anything on the agenda due, so. You put
Yeah, I don't, this
Go
is
ahead.
Russ, if I may. I don't think this is a vote. It's more of a administrative issue. if you want to direct staff to set this up, that's at the board's discretion.
I just go around and
But let's, I mean, I don't see any problem with at least letting Heather send a Zoom link for the board members. Let's start with that and see how it goes. I mean, I went down for this last public hearing and it took me 3 times as long to travel downtown and get home as it did for the actual hearing.
Right.
So, but the minutes of these public hearings are always available and there are written comments submitted. So I think if people are really motivated to make their views known, they have a way of doing it, but let's try at least making it so that we can attend and see how that works for you. It may not be as hard as it seems. I don't know.
With the IDA members, it's easy.
Comfortable with that then starting out
That we're gonna just start with that
with the
and
board
we'll
members?
bring that up at another meeting. Okay, we'll
Good.
see how that goes. I just want to clarify because it was said that I want, possibly I want my constituents to see me. It's not that, it's the people that attend. I want them to see me. I don't, yeah, that's who
Okay.
it is. I want them to see that that it's important to me and that I'm there.
Any other comments? Great. Okay, I think we're moving on to number 4, business. So we've got on the table 510 West State Street. Final approval.
Yep.
Deborah moves
Second
it.
it.
John seconds. Any comments?
should we clarify that it's being moved subject to our newly amended policy, which wasn't actually in place at the time of the application, so we might want to make that clear.
Yes, we can do that.
Have an amendment that it's subject to the
Subject to the newly
duly voted on policy. Any comments on this project?
Yay.
Are we ready to vote? Okay, let's go. So Duxon,
Aye.
Deborah,
Yes.
Ann,
Yes,
John,
Yes.
and I vote yes as well. Okay, chair's report. So I was asked to present, Rich has suggested that we form a construction labor committee made up of Rich, Deborah, Ann, Todd, and Nels Bond. I believe I got the correct
Nels Bone.
Nels Bone. Okay. So I believe, do we have to vote on that to ask them to work on a construction labor committee discussion? Okay, can I have someone move it? Ann? John seconds. Any discussion?
so is it clear? I guess I could ask this, is it clear then that by doing this, we're appointing them, right? To that, okay.
I'll say, so who?
So we've got Rich, Deborah. I don't know if I think we're volunteering you, so.
Yeah. Next time, just let me know before the meeting.
Okay, blame that on Rich. Ann, Todd, and then Nels Bond.
He told you.
So me too, I'm in there?
You are.
Oh, okay,
You didn't know you raised your hand, but we raised your hand for you.
all right.
So just as a point of like, the chair can just establish a committee. This isn't a committee of the board because it's got members who aren't on the board on it.
The
All this
bylaws
business
are
is-
sort of silent.
Right.
So Rich and I talked about it and thought, we usually appoint committees with the approval of the board at the beginning of the year. He thought it would make better sense to have the board sort of bless his recommendation.
So the other board, the other committee is the labor committee? What's the,
No, we don't currently have a labor committee because it was an ad hoc committee and it finished its work when the policy was done, so it wasn't
Okay, so we don't
reappointed.
have a
So this will
current
be
one.
the
All
new
right.
construction labor committee.
Thank you.
Is this an ad hoc committee or is it
My assumption is it would be an ad hoc committee just to manage the policy. And what we generally do if there's ongoing business, we'll just reappoint committees every year. We reappoint the housing committee because we review the policy every year. So we could
Rather
keep
than a
this committee
standing.
on the books if it seems like it needs to be there. But it's not a formal committee that's outlined in the bylaws. I think the bylaws talks about ad hoc committees.
Any comments? I think my only comment on this committee is obviously we've talked a lot about this and Todd's pretty passionate about it, as he should be. And I think in discussing this with Heather previously, I would just want us to make sure that we have our attorneys present at this ad hoc committee, because I want to make sure that we don't step out of our lane in putting forth something that it's really not in our purview. For example, enforcing liens or doing other things. So I would just want us to make sure that, because there's already a lot of laws in place that protects contractors, subcontractors and the like. And I don't necessarily know if we're the right body to enforce some of those items. John?
I mean, I think your concerns are totally valid. And I think, I don't know how many folks who are here right now were here the last time we went through this labor policy, but it went through committee and then came back to the board and was subject to substantial revision in the meeting at which we accepted it. I wouldn't be entirely surprised if that happened again here. That said, I think that requiring our attorney to attend a committee meeting isn't necessarily the best way to address that. I mean, we want to make sure that we get our attorney's consultation before we adopt any policy, but the committee can't actually adopt policy. It has to make recommendations that would come back to the board. And so it just seems like, I mean, certainly we can invite Russ if he happens to be available, but I don't.
Yes, sorry, John. I agree. I think from crossing our T's and dotting our I's, if there's any change to a policy, whether it's a statutorily required one or not, it should go to the board.
Well, I mean, I think that they need to be in the room when it's being.
Right. I think my point is I think I just want to try and be as efficient as possible. If Russ is at the committee meeting, then if we're trying to propose something that we don't need or can't fly, then we're going to deal with that at the committee meeting as opposed to having to talk through it at the board meeting.
Right,
That's my only thing.
How about we have our
8-10 hours of committee meetings, and then we need like 15 minutes of Russ's consultation to make sure that we haven't broken any rules. So, I mean, I think it's just like,
Okay,
we don't
I'll leave it up to the
require
committee,
them
obviously.
at the
So-
meeting, so.
Yeah, I was just going to say that. Let's leave it up to the committee. We've
Yeah, and John,
and that's a
I'm
lot
not
of
suggesting
cost.
I'm not suggesting that we rule by committee. And I'm happy to come to whatever committee meetings you would like me to attend. But that's the point of a committee. It's to make recommendations to the board. They've reviewed it. And it's up to the board then to decide if they want to approve the changes or the policy.
Okay. Are we ready to vote? Great. Duxon,
Yes.
Deborah,
Yes.
Ann,
Yes.
Don,
Yes.
I vote yes too. Glad you guys voted all to be on the committee, so that's good. All right, staff report.
The Ithacan opened August 1st. The parking garage is open after 864 days without the Marriott having access to the parking garage. They're very happy. I did forward today that the Ithacan's having an open house on Friday. If anyone wants to go and see the new building, I will note that they opened August 1st. The 90% of the units are market rate, 100% of those units are leased, 10% of those units are affordable, and 100% of the affordable units are still vacant. They do have a leasing company, and one of their employees came from the affordable housing world, so she sort of knows how to market and how to do all of that. But those units have not been leased yet. So I just wanted to put that out there.
Those are 80% AMI units, is that correct?
Yes.
Yeah.
So, and I think and that was a requirement from the IURA at the city that 10% of those units be affordable. So they're handling the income qualifications and all of that on that project. There was some hope that with Ithaca College putting in their physician's assistance program in the building in front, that there might be opportunities for leases through the affordability program. So, it might just have been timing or something this year, and maybe next year there'll be more opportunity for that.
Does anybody have any theories or ideas about why those units aren't renting?
I mean, 327 West Seneca, the project I raised earlier, had the same problem. 80% AMI is actually really challenging. An individual earning 80% of area median income is earning almost $60,000 a year and doesn't think of themselves as low income. So it's hard to market to them. They have to be in a narrow income band. And so, it's like you get people who are below that income band or people who are above that income band, and they get ruled out, and they have to produce some paperwork to document that they're within that income band. And, they may or may not actually want to show their papers when they have other opportunities elsewhere in the housing market that can accept them quickly with just a signature and maybe a background check or a
It's
credit report.
puzzling, John,
So-
because if I'm looking for an apartment and I know what my comfort level is with how much rent I can afford to pay, I'm going to snap something up if I see it in my range.
Right,
This
but
is
the
a-
affordable units, you have to income qualify with 60%, with $60,000 in income, you might have a 401k at that point. And once you start to generate 401k savings, that's counted as part of your income. So then you don't qualify. Like, it's a little bit of a process. And I know INHS has issues with that too.
You have to produce retirement statements. You have to accept that your bank will produce an asset verification letter to the property management company, which can take sometimes a long time to produce, and the bank may or may not reply. Like, there's a lot that goes into this. It's a thing.
So maybe what we ought to be looking at is how necessary a lot of those requirements actually are. I mean, to me, if somebody can afford to have a retirement account, God bless them, they're still dealing with X amount of income.
Right.
I mean, the question is
But
really
we-
where the
we-
source of
that's
regulatory oversight
we
comes
can't-
from.
Yeah, I know.
A lot of it's the state or federal government, and we have relatively little to say about it. I think in this case, it's IURA, and perhaps they could have made some slightly different decisions. They probably just followed somebody else's program. I mean, designing and implementing a program like this is really complicated. And you don't want somebody coming back later and saying, well, this person had $4 million in assets, but their income's only blah, 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 and you put them in an affordable unit. And I think there's a lot of sort of defensive legislation trying to protect against those sorts of things that makes these programs really complicated.
It's like people that are eligible for SNAP, food benefits that, there's a lot of people that, well, I have to then get in the system and maybe I'm able to buy food, but really, they'd benefit financially if they could get some of their food paid for, but it's just getting into the system, providing all that financial information when you're working two jobs, and have a family can be pretty onerous. I know my brother who was eligible for it, he just didn't want to get into the system and provide all that information.
I didn't mean to open a whole can of worms, but we have a big new apartment building downtown, and 90% of the units are 100% leased, which says something about our market, that there's market for above market rentals. And, we're working on the affordable piece. So if anyone has a chance to go see it, go see it. I see the patio is really beautiful.
You all set then, Heather? Because I know I want us to save some
Yes,
time for
the other
executive
thing I
session.
have is just that the quarterly financial report for the second quarter is in your packet on page 12. And that's all I've got.
We've got minutes in our from July 12th for our board meeting that we need approval. Deborah and then Ann seconds. All in favor, say aye.
Aye.
Okay, can I get a motion to move into executive session and end the IDA board meeting?
I'll move to enter executive session to discuss the
Pending litigation.
ongoing.
Yeah, that's exactly right. I was gonna say, we have to have a reason, and it's pending litigation.
Okay,
moved.
John, Deborah seconds. Okay.
Okay, so give
All in
me,
favor? You need to,
Oh, sorry.
we need to vote.
Aye. Rookie mistake.
And let's take a moment to make sure YouTube is off.